Islamic banking in all over India. Islamic banking is a banking which follows the principles of Islamic laws, Shariah, which prohibits interest. The concept is based on a verse of the Holy Quran that says, Allah has allowed only legitimate trade and prohibits interest. As interest is believed to lead to exploitation and unproductive income. An Islamic banking is a financial institution that operates with the objective to implement and materialise the economic and financial principles of Islamic banking definitions. The Organisation of Islamic Conference, OIC, defined an Islamic bank as a financial institution whose statutes, rules and procedures expressly state its commitment to the principles of Islamic Shariah and to the banning of the receipt and payment of interest on any of its operations. According to Islamic Banking Act 1983 of Malaysia, an Islamic bank is a company which carries on Islamic banking business. Islamic banking business means banking business whose aims and operations do not involve any element which is not approved by the religion Islam. According to Investopedia, also referred to as Islamic finance or Sharia-compliant finance, refers to finance or banking activities that adhere to Sharia, Islamic law. Two fundamental principles of Islamic banking are the sharing of profit and loss, and the prohibition of the collection and payment of interest by lenders and investors. Investor Dictionary defines Islamic banking refers to a system of banking which is consistent with Islamic law and guided by Islamic economics. In particular, Islamic law prohibits the collection of interest, also commonly called riba in Islamic discourse. One form of the argument against interest is that money is not a good and profit should be earned on goods and services only, not on control of money itself. Return on assets. While Islamic law prohibits the collection of interest, it does allow a seller to resell an item at a higher price than it was bought for, as long as there are clearly two transactions. In Wikipedia, Islamic banking, or Islamic finance, or Sharia-compliant finance is banking or financing activity that complies with Sharia and its practical application through the development of Islamic economics. Management Study Guide says, Islamic banking is the operation of banks which are consistent with the Sharia law. Since the Sharia law prohibits the collection of interest as well as any transactions which allow speculation, it is in conflict with the basic tenets of banking. Therefore, the challenge in Islamic banking is to meet the financial needs of people while staying in line with the Sharia law. Smith Bank definition. Islamic banking is defined as banking system which is in consonance with the spirit, ethos and value system of Islam and governed by the principles laid down by Islamic Shariah. While Islamic banking has a broader scope and meaning, it is generally referred to the transformation of conventional money lending system into asset-backed financing transactions conducted by the financial institutions. What is meant by Shariah, Islamic law? Shariah lexically means a way or path. In Islam, Shariah refers to the divine guidance and laws given by the Holy Quran, the Hadith sayings of the Prophet Muhammad sallallahu alaihi wasallam, and supplemented by the juristic interpretations by Islamic scholars. Shariah embodies all aspects of the Islamic faith, including beliefs and practices. Islamic Shariah, or the divine law of Islam, is derived from the following four sources: the Holy Quran, 2. The Sunnah of the Holy Prophet, peace be upon him, 3. Ijma' consensus of the Ummah, 4. Qiyas, analogy. What is the philosophy of Islamic banking? The philosophy of Islamic banking takes the lead from Islamic Shariah. According to Islamic Shariah, transactions involving interest are riba, gharar and miza are prohibited. Moreover, they cannot deal in any transaction the subject matter of which is invalid, haram in the eyes of Islam. Islamic banks focus on generating returns through investment tools which are also Shariah compliant. Islamic Shariah links the gain on capital with its performance. Operating within the ambit of Shariah, the operations of Islamic banking are based on sharing the risk, which may arise through trading and investment activities using contracts of various Islamic modes of finance. Basic principles of Islamic banking. Receipt and payment of interest, riba, is strictly prohibited. The business is based on sharing profit and loss. Certain industries, such as adult entertainment, alcohol, and gambling, are disallowed by Sharia and prohibited for investment. This is why Islamic banking is also referred to as ethical banking. Banks may not lease or lend any product that they do not wholly own. Trading in debt is also not allowed, which is why banks do not deal in traditional bonds. Rather, they have their own version of such instruments called sukuk, Islamic bond. Interest-free loans are encouraged to spread financial inclusion. The disclosures coming to light for prohibitions of interest by Islamic laws are: the interest deprives someone from the blessings of Allah, as it leads to taking away of property actually belonging to someone. Muslims should stay away from interest for their own welfare, as it eventually invites Allah fury. The law prevents taking of any type of agreed and pre-arranged amount over and above the actual principal amount from the borrower. And in case the borrower is unable to repay the principal, then they should also forego their demand for principal. The Islamic law condemns not only those who demand interest, but also those who pay interest. All interest-free banks agree on the same basic principles. However, individual banks differ in their application. These differences can be because of several reasons, including the laws of the country, objectives of the different banks, individual banks' circumstances and experiences, the need to interact with other interest-based banks, etc. Concepts in Islamic banking. Amongst the common Islamic concepts used in Islamic banking are profit sharing, mudaraba. Islamic banks offer savings and time deposits in the form of investment accounts under the system of mudaraba. The depositors of such accounts share profits and/or losses of the institutions under an agreed-upon formula. The depositors in mudaraba accounts are the suppliers of capital, Rab al-Mal, who entrust their funds to the bank. Mudarib. In the tradition of Western-style investment banking, subject to dealings with only non-1 interest-bearing instruments. The mudarib, acting as money manager or agent, invests the money and then distributes the profits and/or losses on the basis of the agreed-upon contract. The following conditions must be met. Profits to be shared must be proportional to the funds contributed to the mudaraba account, and these cannot be in lump sums or in guaranteed amounts. The loss to the depositor, contributor of funds, cannot be more than the amount of deposit. Non-interest-bearing demand deposits, checking accounts. Conventional checking accounts in modern commercial banks are non-interest-bearing deposits. And since Islamic banking institutions shun interest rate-based dealings, most of them offer such demand deposit accounts. Ideally, Islamic banks should not be charging any fees on checking accounts, as they are free to employ the depositor's money. Subject to the reserve requirements, if there are any, into earning assets. In practice, however, this is not always the case. Depending on the size of the deposit, service charges and fees get collected to meet operating costs. Joint venture, musharaka. The third instrument used by Islamic banks is musharaka, which is a form of equity financing through joint ventures. Unlike the case of mudaraba, here the bank not only participates in the supply of capital to the venture, but also in its management. Thus, the Islamic banking institutions assumes the role of an entrepreneur as well as that of a financier. Cost plus murabaha. The fourth instrument, murabaha, or more specifically, by 1 mujal muraba cost plus financing, used by the Islamic banks consist of transactions where the institution buys a product, e.g., a car or a machinery, on a client's behalf, and then resells this with a markup to a client, the borrower. Thus, an automobile selling at a price of $20,000 may be bought by the Islamic banking institutions and resold to a client at $25,000 to be paid back in monthly installments, or a lump sum at the end of the loan term, over a 2-year period, instead of interest in a traditional loan. The bank makes a profit with the difference of the purchase value. Leasing, ijara. The fifth instrument used by the Islamic banks is ijara, or leasing. Two types of leases are used. In one, the lessee pays the lessor installment payments that go towards ultimate purchase of the equipment by the lessee. This type of lease purchase agreement is known as ijara wa iktina. The second type of lease maintains the ownership of the lessor as per the lease contract. What are the impacts of Islamic banking in India? 1. India is a secular country by constitution. Thus opening any financial institute with the name of religion can raise question among other religious groups. 2. There would much of chaos for manpower in Islamic banking. There is a lack of adequate workforce trained in Shariah banking. 3. The present banking rules and regulations in India do not allow the operation of Islamic finance in India, for it creates hurdle in achieving complete financial inclusion. 4. Section 8 of Banking Regulation Act mandates that a banking company cannot deal in the selling and buying or bartering of goods, which is prevalent in Shariah complaint structures, such as mudaraba in India. 5. Islamic banking may pave the way for the entry for terrorist funding. 762. Islamic banking in India, a NO from the RBI, complete information YouTube. Islamic Development Bank, IDB, in May 2016 announced to open its first branch in India at Ahmedabad, Gujarat. IDB is headquartered at Jeddah, Saudi Arabia. The plans to set up the branch at Gujarat is part of MoU signed between India's Exim Bank and IDB during Prime Minister Narendra Modi visit to United Arab Emirates, UAE, in April 2016. Concept of Islamic banking in India. A committee headed by Raghuram Rajan submitted a report to the government in 2008, in which the committee, without naming Sharia banking, suggested the need to have interest-free banking in India. The report said that the non-availability of interest-free banking products in India eventually results in some Indians including those in the economically disadvantaged strata of society. Not being in a position to reach the banking products and services due to reasons of faith. This non-availability also forbids access of many Indians to substantial sources of savings from other countries in the region. As a consequence, the Kerala government had tried to co-promote an Islamic finance institution. But this move was challenged in the High Court. The concept of Islamic Bank got further push with the recommendation from the committee named as Medium-Term Path for Financial Inclusion, headed by Deepak Mohanty. This committee has advocated interest-free windows in existing conventional banks. On the other hand, the government also appears to be inclined towards implementing the Islamic banking. The government has advised the RBI that before taking a decision about Islamic window, the legal, regulatory, technical issues need to be clarified by the RBI. After this, an interdepartmental group on Islamic alternative banking was formed within the RBI to evaluate the issues for introducing Islamic banking. The State Bank of India, SBI, had launched a Shariah-compliant mutual fund in 2014. It was the first time a state-owned bank rolled out an Islamic financial instrument for the country's estimated 170 million Muslim populations. Why Islamic banking in India? India has a substantial Muslim population. This not only showcases a huge potential for the growth of Islamic finance, but also an inherent necessity for it. In 2011, there were approximately 180 million Muslims living in India, and this is estimated to rise to 310 million by 2050. This will make India home to the largest Muslim population in the world. In India, at the same time, most Muslims are self-employed and most of their investments are not adequately supported by banks. Presently, there is a need to increase financial inclusion of Muslims in India, which has not happened substantially because the Indian banking and financial system has failed to take note of Islamic financial principles. And as a result, it failed to develop financial products like the Middle East and Europe. A report released by Satchar Committee back in 2006 points out the necessity of Islamic finance in India. The report said Muslims hold 12% of accounts in public sector banks and 11.3% in private sector banks, which are less than their share of 13.4% of the overall population. So the Muslim population is in need of financial inclusion, and Islamic banking is a prominent idea to satisfy this need. Problems for Islamic banking in India. India is a secular country by constitution. So opening any financial institution with the name of a religion can raise questions among other religious groups. Apart from this, some political parties have said they will oppose the introduction of Islamic banking in India. Another reason that has withheld growth of Islamic banking in India is the lack of adequate workforce trained in Sharia banking. And Islamic banking is based on strict Sharia laws of not paying or taking the interest. So the application of Islamic banking will call for a complete change in the banking regulatory system. The foremost concern for the development of Islamic banking in India is the development of comprehensive legislation, regulations and rules governing the same. Former RBI Governor D. Subbarao objected that present rules and regulations do not allow the operation of Islamic finance in India. And this creates a major hurdle to achieving complete financial inclusion, given India's growing and prominent Muslim population. The banking in India is governed by the laws made in the Archaic Negotiable Instruments Act of 1881, Reserve Bank of India Act 1934, and Banking Regulation Act of 1949. The core principles of all of these legislations stand in direct conflict with the principles of Islamic finance. For example, the payment of interest on deposits is mandatory under the Section 21 of the Banking Regulation Act. But it is clearly prohibited under the riba principle. Section 8 of Banking Regulation Act mandates that a banking company cannot deal in the selling or buying or bartering of goods. This shows the impossibility to have Sharia-compliant structures, such as Murabaha in India. One of the criticisms of the introduction of Islamic banking in India is Subramanian Swami's suspicion about it. He objected to the launch of Islamic banking in India by saying Islamic banking will pave the way for the entry the dubious funds of the Middle East into India through legally baptized channels of Sharia-compliant financial institutions. And he highlighted that these dubious funds hold the volatility to be used for terrorist funding. He also claimed that it can raise the rate of Islamic conversions in India. So, what now? The criticism that introducing Islamic banking in India will raise Islamic conversions in India is avoidable because in countries like Singapore and Malaysia there have not been any such incidences. And the skepticism that Islamic banking will enhance funding to the terrorist organizations seems flawed because all the money circulation in the banking sector in India is under the regulation of the RBI. So, it is very unlikely that any RBI-affiliated bank can send money to any banned terrorist organization. Another doubt about Islamic banking, which says it will harm the secular fabric of the country, can be questioned. Because Islamic banking will serve the need of many people who have been marginalized, and it will bring them into mainstream banking. So, it is an inclusive step, and our secularism is meant to promote inclusive values. Thus it can be said it will not harm the social fabric of the India. So, we have discussed the reasons which are in favor of Islamic banking in India, and also the reasons which are against it. By viewing both perspectives, it seems reasonable to say that a gradual introduction of Islamic banking should be a welcome step in India. The Indian government also strongly emphasizes and supports the idea of finance inclusion. A noticeable part of Indian population still needs to be a part of financial inclusion program of the government. So initiatives about Islamic banking should be taken in future.